What's up, YouTube? Eric here, Mr. Fired Up Wealth. Today, I'm going to give you 5 reasons why I think Amazon stock is a buy now. You're going to want to see this one. Stay tuned. Okay, guys, so the first reason I think Amazon stock is a buy now, they basically told us they just crushed it over Black Friday and Cyber Monday. I'll get to that in a second. Before I do, this is from the CEO, Jassy, in the last earnings call. They had earnings recently that weren't all that great, and we'll talk more about it here. So if you think about Amazon's business, it's very cyclical. They'll ramp up and they'll build, they'll spend money on capital, building out the infrastructure and logistics, then they'll go through a nice healthy stage, and then they do it again. So they're talking about trying to prep for this holiday season to make sure it's a great holiday season. Last quarter, we discussed the physical capacity we were adding to meet customer demand. So the customer demand has been so high from the pandemic. Not only did they have supply chain constraints outside of Amazon, Amazon itself has had supply chain constraints really since the pandemic. They made strong progress in Q3 to build and open new facilities. This is going to help with that, of course. And as a result, we're no longer capacity constrained for physical space in the network. This is big. To put in perspective, we're on track to double our fulfillment network over a 2-year period since the pandemic's early days. These guys are ready for a ramp up in e-commerce spending, and that's really where the appetite is. Even after the pandemic, people have created habits buying things online, and that's probably just going to continue to accelerate with time. We'll talk more about the numbers here in a second from Adobe. Now, this is from Amazon, right from the horse's mouth. Customers drove record-breaking Black Friday through Cyber Monday sales at Amazon. They're telling you they crushed it. And that's a good thing as an investor. You know that they're going to have some good numbers off this. They also began operations at its new Northern Kentucky facility, $1.5 billion investment, over 2,000 new jobs over the next several years. And this is really going to be the primary hub for Amazon Air's U.S. cargo network, enabling Amazon to process millions of customer packages per week. They're trying to be, and with time, they're going to be bigger than FedEx and the UPS, at least in the United States, and who knows globally. Amazon's ambitions are still very high. And it's a mature growth company. It's very big at this point, but they're going to keep growing, guys. Now, if you look at this is from Adobe, online prices. So we're talking about higher prices. Now, you could argue that Amazon might have a little bit of pricing power just because they're so big, they can negotiate better rates. But what I want you to focus on, the very last sentence. This is from Adobe. The company notes that a quarter of all consumer spending is now conducted online, making the digital economy a significant component of the overall economy. So 25% is a big number, but that means there's still 75% that's not online. And Amazon is poised really to be the front runner when you think of people spending money online and e-commerce. The second one, number 2, and everybody knows that Amazon Web Services, AWS, is Amazon's cash cow. But is it? We'll talk more about that in a second. Now, the recent quarter, nearly 15% of Amazon's total revenue came from AWS. You look at the Q3 2021, Amazon Web Services nears almost 40% year-over-year growth, and Amazon leads the growing cloud infrastructure market. They have about 41% market share as 2020. That might be a little bit less. We'll get that report here soon for 2021. But they should be around 40% on the market share. Their operating income, listen to this. So for AWS, $4.88 billion. That was an increase of 38% year over year. Now, if you compare that to operating income across Amazon as a whole, it was $4.85 billion and a 21% decline. That tells me this last quarter, AWS basically bailed them out. They had a pretty rough quarter with those supply chain constraints and labor issues, just a lot of different issues with these macroeconomic events that were impacting them. And I think in 2022, you're going to see the other side of that and they're going to come out of it. Amazon Web Services is still there. And I think there might even be an acceleration to AWS in 2022 as well. Amazon Web Services also will build cloud data centers in New Zealand. So if you're from New Zealand, got the All Blacks on, that's going to be pretty cool. I'll show you some details in a second. Here are some quick kind of headlines that I've gathered across the internet. And some of these are old, like this is from July. But AWS, so not Amazon, just Amazon Web Services, is growing so fast, its revenue makes it bigger than Cisco or HP. Think about that for a second. That's pretty impressive. This chart here is growth in millions of dollars just for Amazon Web Services since Q1 2014. Look at that growth. Amazing growth trajectory. And that's still, if you look at it, it's still ramping upward. Cloud services, you think about the cloud, it's still in early innings, and these guys are still going to be a major part of cloud services as a whole. They continue to make new products, etc. Amazon on track to be bigger than IBM by Christmas. There's another one. So Amazon.com released Q2, this is from Q2, it's a little old, revealed that revenue from its cloud AWS services, Amazon Web Services, jumped 37%. But listen to this, a figure that takes it past Cisco, which we already talked about in annual revenue, and puts it within striking distance of Lenovo. I mentioned this earlier, but Amazon Web Services announced they're going to build infrastructure in New Zealand. In 2024, it'll consist of 3 what they call availability zones, giving customers choice and flexibility. A new released AWS economic impact study estimates the new infrastructure region will create about 1,000 jobs in New Zealand over the next 15 years. And it's an investment of about $5.3 billion US, 7.5 billion New Zealand dollars. So listen to this, AWS has 81 availability zones in 25 geographic regions, and they want to launch 24 more of these availability zones, so it'll be over 100, and they want to do 8 more of these AWS regions, taking that number to 33 total regions. So pretty impressive growth. Now, this is another quote here. This is from the last quarter, and it's talking about AWS acceleration. I'd say that we're seeing it. A lot of customers accelerated their journey to cloud-based on the pandemic. But with that said, companies in some industries, such as travel, suppress spending in 2020. So you're seeing more of that in 2021, and you might see a pull through even in 2022. So this next one, guys, number 3, this is a bit of a curveball. You know I like curveballs. So is AWS really the cash cow, or is it now the marketplace? Now this is somewhat controversial and it's not proven, but regardless, it's showing you a lot of growth in this marketplace segment. Report claims Amazon collects over 1/3 of seller revenue, bringing in $121 billion in 2021. So there's a new study, and this is from December 1st. This was a TechCrunch article. New study claims Amazon makes more from fees on its marketplace than even the cash cow known as AWS that we just talked about. The report says Amazon fees are basically about 34%. And this lately has become Amazon's primary revenue stream. Now the company, Amazon, disputes the report's findings. So it's not proven to be fact, but it's interesting nonetheless. So this report is from the Institute of Local Self-Reliance, and it's called Amazon's Toll Road, and you can check that out. It makes 2 primary claims. First, that in 2021, Amazon will bring in $121 billion from sellers in forms of fees and advertising payments, about 34% of the seller's total revenue. That's twice the estimated $60 billion from 2019, which at the time was 31% of seller revenue. So that's gone up a little bit, partially because of maybe advertising and things. Now, Jeff Bezos had to talk to Congress, if you remember, and he kind of blew it off and said the increasing amount of money going from sellers to Amazon is something of an optical illusion due to more of them choosing to pay for add-on services like better placement on keyword searches and using Amazon's own shipping and warehouse infrastructure. There's no question Amazon's giving you a very powerful platform as a reseller. The question is, what is it worth? You think of like Apple and their marketplace, and they're charging 30% for their fees to basically hold your apps, on their marketplace. What do you think? Is that too much? I could see an argument either way, that 34% is too much, it's gouging, but at the same time, it depends on what they're getting from that. Because I would argue that if you just started up your business and didn't have Amazon, you'd make a far less money, even if they take, 1/3 of your profit or 1/3 of your revenue. So let me know in the comments, what do you think? I think it's interesting. It's a great conversation. This contradicts conventional wisdom about the company. News stories commonly describe, and this is what I've always heard too, that AWS is the source of the most of Amazon's earnings. We find that marketplace may have generated operating profits of $24 billion in 2020, significantly more than the $13.5 billion in profit reported on AWS. This is a huge accusation. We don't know if it's true, but I think it's really interesting. Again, what it really shows me is the marketplace, even if it's not bigger than AWS, is still a big part of their business, right? AWS has long been seen as Amazon's cash cow. This report finds that the tech giant has a second cash cow, which it keeps quietly out of view. This is very interesting stuff. Amazon told me that it cannot speculate, basically blew it off, and then asked if the numbers were accurate. So again, we don't know if this is fact or not, but either way, it's showing us that there's another part of their business that's bringing in a lot of cash. The 4th reason I think Amazon is a buy now It employs 1.3 million people globally, actually over 1.3 million. And you say, well, what does that have to do with me buying the stock? So if you think about social responsibility, trying to invest for the greater good, if you think about it, Amazon, so they added 500,000 employees, 500,000 employees just in 2020 alone. And that's not a reason necessarily by itself to invest in a company, but you hear a lot of negativity about how Amazon is this evil empire and it's the machine, and people complain about their jobs at Amazon. But if you dig under the hood on that and really look at it, Amazon pays above average wages. They have very good benefits, very good benefits. And if you think about the opportunities it's created, and not just in the US, this is global in countries all over the world. I could argue that Jeff Bezos created something special that helped people in a lot of ways and also brought a lot of jobs to a lot of people that improved their lives and gave them opportunities that they might not have had without Amazon. So I think just for the social good of it, for me as an investor, I like putting my money in a company like Amazon because it supports so many families and it does so much good for the world. And you hear all the negativity about how it hurts small business and things. If you really understand the business, they actually can help small businesses reach out and branch out across the entire world by selling through the marketplace. So there's always going to be good and bad, but remember, at the end of the day, Amazon is a business to make money. It's for profit. It's not a non-profit company. And I think it does a pretty darn good job, and it supports jobs globally. Now listen to this. Forbes ranked Amazon number 4 on its world's best employers 2021 list. And this isn't just US. 58 countries around the world and 150,000 employees were surveyed. I think that's pretty powerful and kind of proves some of the information that I'm trying to present you here. Now look at the employment numbers. This is a chart from 2008. And you can see that the growth is exponential. That's a parabolic chart. If that were a stock chart, that's a parabolic chart and you're about ready to sell. But the reality is they've got over 1.3 million jobs globally. They're helping a lot of people, a lot of families, and it's going to continue to grow. Amazon is not shrinking. They're still in growth mode. They're a mature business and they're not hyper growth, but Amazon is going to continue to grow at a nice rate and more profitability is going to come as they scale. The fifth reason, and the one that you most care about, is the stock price and where it's going to go. Now, it's been a laggard for the last year, and I think it's poised for a strong 2022, and I'm going to show you why here. Now, if you look at it just from a quick glance, it's trading around $3,400 a share. It's a $1.75 trillion market cap. It's up only 7% over the last 52 weeks. Now, the PE TTM is 67.81. You don't necessarily always use PE on a stock like this. I like the price to sales ratio, so what I'm going to do is show you that. Now, this is price to sales going back to 2017 over the last 5 years. Now, if you see there, July 19th, 2017, the price to sales was 3.341. Right now, it's 3.823. And I mentioned earlier in the video how it goes in cycles, where it likes to build up its, spend capital to build up its business, its infrastructure, and then it goes steady for a little while, then it builds up, spends money, it goes steady. You can see the cycles, the peaks and valleys with this price to sales ratio, and you can watch the stock price and it does something similar. So if you look at this, you can see that we got up, around 4.5 or 5 towards the end of 2018. And then the stock traded sideways basically for a year, like it just has. Then if you look at the pandemic, it rallied from the pandemic all the way up to about a 5.5 price to sales, which was too expensive. So what happened, guys, is the stock basically ran really hot, really hard, really fast. The price to sales on the thing, darn near doubled. And what it's doing is it's catching up to itself. And now if you look at it, it's trading at about a 3.8 price to sales. Anytime it gets below 3.5 price to sales, it's when you want to buy it. And every time, if you look at the last, decade, every time it gets under that 3.5 price to sales, the stock will do good things and it'll kind of, cycle back up and then flatten. I'll show you a chart here in a second too. Before we do that, this is Amazon compared to Microsoft, Apple, and QQQ. So on the very top of your chart, you're going to see orange. That's Microsoft. Microsoft over 52 weeks, it's up almost 52%. So that's about 1% per week. You look at Apple, Apple's the blue. It's up about 39%. You look at the purple color there, that's QQQ. That's the NASDAQ 100. It's up about 27.67%. And now the gray one on the bottom is Amazon. Amazon's only up 7.11%. And you don't just go buy a stock just because it's been a laggard, but I'm going to show you here why I think it's poised. Not only about what we've already discussed, but also from a chart perspective and just the overall valuation and then the history of how the stock performs. Let me show you some technical analysis next, and I'll show you exactly what I think is going to happen. All right, guys, Amazon chart here real quick. So this is the all-time chart, and you can see if you invested early, you're very wealthy right now, more than likely. Now, if you look at this, this looks like a massive bull flag to me. You got this flagpole right here and a pennant, and it's probably gonna break out to new levels. But what I wanna do is actually show you some of the cycles here. So if I look at Amazon, I go back to say 2016, you'll see that it kind of trades sideways for a while, then it makes a pop up, then it trades sideways for a while. What I really want you to see here, guys, is when you think, well, Amazon's been trading sideways for over a year and it's garbage. I mean, Amazon stock in the pandemic, guys, March 2020, it got down to like $1,600 a share, and then it shot up, over 3,000. So the stock literally doubled, over the pandemic here in a very brief time, and it's just catching up to itself. So it trades in these ranges where it trades sideways for a while, makes a pop up, trades sideways for a while. I would argue that it was a little bit of ahead of itself. And basically we have to have earnings to catch up in that growth. I think we're getting close to that. Now, if you buy it today, it might not just, rocket in the next couple of months or anything. It could, but I think if you're buying this and you're thinking about 1 year, so you're thinking about next, December, the end of next 2022, next year. So in 365 days from now, I think Amazon will outperform the S&P 500. Let's look at a shorter duration chart and see where it might go. So this is still a 1 year chart, but I want to show you real quick. This magenta line on the top and bottom, this is kind of the resistance and the support. So it's trading really in this range, in this channel, basically around $2,900 up to about $3,700, $3,800. It's trading in that range. And so what it does, eventually it'll coil up and eventually it'll snap and go one way. I think the fundamentals are going to support this stock over the next 12 months for this to go higher. But from a technical perspective, it looks really healthy, how it's just coiling in that range. And eventually I think it's going to want to pop higher. It probably bottomed on this S1 around 3,300 a share. It's trading right now 34.22. I mean, if you can get it lower, as close as you can buy this thing to 3,000 a share, that's going to be that magic number when you think of that price to sales being on a 3.5. You really want it at like 3,000 a share. Whether or not you're going to get it that low at this point is questionable. You can see in October, it hit 31.76. It hit 31.75, basically end of August, hit 31.72 in June. So it has pretty strong support. At least 3 different times it's tested that range. And it might not want to come back to that level. And that's what looks like it's happening. If I actually draw this up, it's kind of making lower lows in here and it's starting to kind of trend upwards. So I think if you can buy the stock, like I said, close to 3,000, but even in this range, if you can get it, 3,300, maybe even dollar cost average in this range, buy some different lots, buy 3, 4, 5 times. I think that this stock will do well over the next year. Of course, there's always macroeconomic events where the stock could swing. Just keep it on your radar. But even at $3,400, I'd be willing to guess that it's going to be significantly higher than $3,400 in 12 months based on my research. It is my top holding in my portfolio. If you guys want to take your game to the next level, check out Patreon, Fired Up Wealth. If you haven't subscribed to the channel, hit that subscribe button now, click that bell to get notifications, drop me a like, drop me a comment. Appreciate your time and attention. Hope you have a great rest of your day. Take care.